Oswal Wealth Creation Study is a much-awaited event where this veteran group gives us some logical and scientific ways of approaching stock picking. Lata spoke with Raamdeo Agarwal yesterday on their 21st study. Let's listen.
TCS is the largest wealth generator from 2011 to 2016. Ajanta Pharma is the fastest wealth creator over the same period. Asian Paints is the most consistent wealth creator from 2006 to 2016. These gems I am reading out from the 21st Motilal Oswal Wealth Creation Study. With me is the author, whom we all know, of course, Raamdeo Agarwal. Raamdeo, thank you very much. Year after year, you come and present to us your wealth creation study, which is, how would you describe it? A systematic way of thinking about stock selection?
Thinking about understanding how the markets work and what are the one or two qualities you can imbibe this year so that you can be better for the next 12 months and then yet another one.
Okay. Yeah. So what would you say is the most important theme of your 21st wealth creation? If I read your point right, you said it, stock selection is what you have spoken about, your QGLP, quality, growth, longevity, price, what you have always told us. But today you have come with a different first theme in your study. It is not just what to select, but how much to allocate.
Yes.
So tell us about this first mantra for the current study.
Yeah. So basically, if to make money in the market, you need to buy right stock. Okay, that's the very first step. So you bought the stock. The second engine, powerful engine, is how much you buy. What to buy, how much to buy. So the first 20 studies from 96 till 2016, we took care of what to buy, quality, dividend oriented, what price to buy, what kind of businesses to buy. So all kinds of things we covered in first 20 studies. Then we said this is the very important portion of, very important part of the portfolio management. That is how much to buy, how to build a portfolio, how to allocate. So that's it's a second engine, but as powerful as the first engine. But in academia, there is very little on this because there's no framework to say you should buy 10% or 12% or 5% of, but yet it is very important. Everybody is practicing. Trillions of dollars are being invested.
When you were explaining this before you started off, you said that, for instance, you have Eicher Motors in your Focus 25 and in Focus 35. But one of them does better because it has a greater portion in Eicher. So exactly how do you allocate? Is that also part of your study?
That is the heart of it. Say if you have two portfolios, in one place you have, say, Eicher or Bajaj Finance, which has doubled in last 12 months.
Yes.
If you have something doubling in 12 months, in one portfolio you have 5%, in another portfolio 10%. The difference is in the performance, it will make a difference of at least 5% in terms of one portfolio or other.
Okay.
So, so when you have winning stock in the same house, and you have 5% in one and 10% in other, or maybe 15% in other.
Yes. So obviously the 50% fellow performs better.
Better. So it's all about compounded performance of the portfolio. And you are always seeking to enhance the performance, and by chance, another way, that 5% which is not there in say Bajaj Finance, if that goes to another inferior company which actually doesn't do well, so you get double kind of punishment.
Okay.
So it is very important that your allocation is optimum, and the winning horses, they get the big bet, and the one which is not so great, they get less of it.
Well, you're also speaking about the fact that you should try to get an edge. Now, we don't have an information edge because now information is commoditized, and therefore you should have an analytical edge. But tell me, Raamdeo, to come to the way the stock markets are at this point in time, which sector do you think can have that kind of an edge? I mean, we are getting into digitization, we are getting into, more people using the formal financial sector. So what, according to you, in this stage is the most likely sector that can have, the characteristics of what you're looking for?
Yeah, so you got to have, see, there are two types of advantages an investor has. One is informational advantage, and second is the analytical advantages. As you said, information advantages kind of dissipating. It is almost online. Everything direct from
Google
the
has given
boardroom,
it in the
Google has given,
fingertips.
and even the companies, they have to first disclose and then deliberate about it.
Yes.
So there is not much of informational advantage. Still there, but not that much. If you come to know about the growth plans of the company, or if they are going to get some patents, or they have cracked some cost structure, or they have got some new MD coming in who is master of the game. So those are the informational advantage you have. You can bet on the leadership change or management change or some new product innovation. So those are informational advantage. But analytical advantage is to do with how those businesses are run. Say like you say value migration.
Okay.
Now, so the analytical framework is that the old business models, they give way to the new business model. So public sector banks are suffering, they're suffering, and the private sector banks are
taking
gaining
away the
edge
market share.
because of the better compensation strategy, better
Technology.
competition, technology and everything. Now, and then banking sector is growing at 15%. And these guys are almost 70%, which will go to say from 70% it goes to by chance 30-40% in 10 years. Then this, on a 15% growing industry, if the market share also goes from 30%
then they
to
will
60%.
grow probably 25.
So you are looking at 20 to 25% growth for the private sector.
Okay.
Now, which is the best private sector bank? So this is how, so analytical advantage is in understanding which way the wind is blowing. Where is the tailwind? See, in businesses, all these large businesses which are built, we give credit to the MD or owner of the company, but bulk of the benefits are because of the tailwind. So you have to understand from the analytical framework, where is the tailwind going to be? Or where is the tailwind right now and where is the tailwind going to be? And then the king of that tailwind, the best of the lot, say in private sector banking, you have an HDFC, we have an Insyn Bank, you have a ICICI, you have Axis, you have new set of banks coming in, RBL and other.
Yes.
So which one to bet on at a given price?
Okay.
Then it becomes a company-specific issue.
Well, that's where we turn
Yeah.
to Raamdeo Agarwal actually for advice. But Raamdeo, since we have you at a very critical juncture, we've seen this huge bull rally in global markets. What started on November 8th in the US markets seemed to be just a Trump season, and now it is getting to be bigger. Do you think we are entering something like a phase we saw in 2003? Do you think that this wind can be a little bigger than we have seen in the last 5-6 years?
At least in 2003 also when it started, I was skeptical for first year. Okay,
Yes.
so I mean after 8-10 years we are overdue for this. But if you ask me, I don't feel like that. At least for Indian market right now.
Okay.
I mean global markets actually yes, because the Trump's promise of dramatic reduction in the corporate tax rate can have a huge impact in the way America works, the way dollar can be very strong, the way US corporate profits can zoom.
Yes.
So that optimism is building into, and then bond yields are going up. So all the fixed income guys, they are dumping the bonds and getting into equity. So there is a lot happening in that side of the board. We are stuck here in our own kind of local
But you
challenges.
don't get a sense that there is probably a bottom in place? I mean, after all, the credit policy was expected to give a rate cut. It didn't give a rate cut. Demonetization, most brokerages have reduced their earnings. But the market has chugged on. Are you getting a sense that it has been able to put a bottom?
Yeah, so the Maggie moment is over in the sense that
Okay.
the withdrawal of the brand, withdrawal of the money, so that gave a 8-10% whatever downturn. That has happened, and now at what pace it will recover to go back to the old levels and then new high.
Okay.
That maybe 2-3 months as the economy comes back from the demonetization effect, I think we'll get to see more of it. Maybe we might come back with a lot more vigor,
So a new high in 2017 looks possible, you think?
Yeah, because we are not very far off from the new high. So that 12-15% can always happen, but one is always wrong when it comes to predicting the levels even on a 1-year basis. But I always remain optimistic. We are fully invested, though skeptic at this level.
You're not in cash at all?
No, we have never been in cash. In between, when the demonetization thing came, that time we held it back a little bit. We said, let's stagger it. But the moment this kind of bottom happened, or we felt that it is not going to go down more, then we said, let's go back to our natural pace of buying, which is whenever money comes, we buy. Whenever they need the money, we sell.
Okay, to end the conversation where we began, Aisher, you still think that it is going to give the kind of multi-bagger returns it has already given you?
It cannot give. It cannot give. It must meet my portfolio objective. Can it double in 3 or 4 years? That's the call.
Okay.
It's no more, I mean, we bought it 3 years
It is
before.
no more the Ajanta Pharma of your
No,
portfolio.
I mean, see, those names will never come, you will not ask those names.
Okay.
Because they will not be as popular.
Fair enough.
Because they will be mostly unpopular and only we or few more people can see, not the masses. Then only we can make multi-bagger. Right now, these are at best double in 3 to 4 years.
Okay.